Hi, good evening, ladies and gentlemen. This is Manoj Atri, your host for today evening. I'm a real estate agent with Remax Hallmark, and for a change, today we are live on time with not very many glitches. Our mortgage expert is also there. We were able to test out our mics, and we may be able to start on time and with voices and everything. And thank you for joining. Let's get you a head start with the agenda of the day, and then I will let me get you a hi from our mortgage expert. Hi, Faisal.
Hello, sir. How are
Yes,
you?
sir. Very fine. So you are live today, and we will be now. I'll start with the day agenda, and
Yeah.
then we are reviewing the credit report and score today.
Mm-hmm.
We'll be needing you throughout the whole session today,
Okay.
and we will. It's an important part, and it looks easy, and I don't think so. It is easy, but it has lots of nuances and complexities.
It's actually made. I looked at the content a few times. It's very interesting one.
Yes,
Very interesting,
yes,
and it is done in such a way that anyone can understand.
wonderful. So let me start with the day agenda, and then I will get back to you.
Okay.
Wonderful.
Thank you, sir.
Thank you. Okay, ladies and gentlemen, again, thank you for joining, and we are now going to give you some brief about what we are doing today and where we are. I'll again, as usual, I'll be starting with my real estate monologue, and there is lots of the word recession is coming back again, and we are going to review an article from some of the experts in there who are giving us some heads up on this particular one. So they are saying the recession is looming large, and we are going to review that article. That is where our real estate monologue will start, and we'll go through what these economists who are very much the known figures in our market, what are they saying, and what are they feeling, and I will give you my real estate, and then format like how as real estate agents we are finding the market, and then we'll try to get some mortgage experts format also on a review of that particular thing, so you can get an idea from all aspects of it. Next is our home buying step 3, and as we are doing from our last webinar, we are reviewing a Canada Mortgage and Housing Corporation first time home buying guide step by step. And last time we were on step number 3 when they had pointed us that we should be reviewing the credit report and score. So at that particular, so there is a slight deviation there for from that home buying step continuation for step 2-4, and we are now going on understanding your credit report and score. It looks very easy. Like we all have a bit of an idea about what the credit reports and scores are, but you with these particular two things, one was the understanding a PDF, and all those links are in the webinar live streaming where it says show below, and you will be able to see all of those links there. And then there is, by the government of Canada, a financial institution format also has a workshop whereby it has a power presentation, and we are going to review that, and you will be able to understand a lot about the credit report and score. And at each level we will be getting our mortgage expert to review this with us and giving his insight constantly. So that is what we will be trying to do. So the mortgage expert will be there. He'll be reviewing the credit report and score with us constantly as and when we will go. And the next step we will be doing is a workshop on understanding your credit report and score. I am not sure we will be able to complete the workshop in today's session. So we might take it over to the next webinar, and we'll see how much we can cover it for today. Okay, so let's start with the real estate monologue first, and give me a moment here. Let me see if I am on the right pages there, and I will then start and head you over to the real estate monologue. Okay, I am there. Now this is, let's go through here. It has probably, yeah, we are here. Economists warn recession on the way. Okay, so and this was my curated topic also for the day, which I emailed it to all of my subscribers. And let's go through it. We'll go slow and we'll try to get as much information as we can. Two highly respected economists offered different view of the severity of the next recession and its impact on real estate. Now, when we are on this term recession, I mean, I'll constantly keep on briefing you about my real estate aspect of whatever we are seeing in the market, and then we are seeing what are these respected economists sharing with us, and we will take their opinion and what are their insights coming into. I had seen a brief recession in the year, probably if I am not wrong, in the year 2008 and 2009, when we had a US subprime, and for some few months the market had completely gone down. And from that time onwards, so it's almost being close to 10 years that we are going in the right direction, and everything is smooth, except in the 2016 when the market went absolutely crazy, and there was like a 32 or 33% appreciation within a year. From like in the year 2017, mid-June onwards till now, in the entire 2017, it has settled down. It is going regularly, whatever is the appreciation that goes on every year, that's just going on. But now these, so that's the general look around. So let's read what they are saying. And they are saying severity of the next recession and its impact on real estate. And both of them are lockstep on one point. The current cycle has run its course and some sort of economic turmoil looms. So that is what they are saying. There is some sort of, and when we read this whole particular thing, there is something. It's not been able to get the full assessment done, but there is some economic turmoil which is looming. David Rosenberg and Benjamin Tal had similar messages Wednesday as they opened the Toronto Real Estate Forum at the Metro Toronto Convention Center. So this is a recent one which has been done on the 29th of November. So it's a very recent one. Don't be that person playing by the old rules. Very important. That's what they are saying. Whatever has happened as an old rule, just don't just get geared up for the new rules. Play by the new rules. The old rule was exactly a year ago, which was the complacency in the market. Almost for the first time in the century, last year everything rallied together. So there was a sense of complacency that was there in the marketplace. That is what they are saying. What is happening this year in the marketplace that is showing so much confusion is a mean reversal to last year. So that is what they are coming up with. That last year, forget last year. Try to see new perspective in this particular year. And from their point of view, they are saying evidence points to a recession. And let's figure it out. Why are they saying this? They're saying the bull market and everything was old paradigm. He said, I find it amazing that so many people that I speak to who manage money for a living are still thinking of the bull market mentality because it's over. So they are saying that the bull run that we had is over. So we have to acclimatize ourselves accordingly. While Rosenberg seemed to be hinting at a sharp correction, so one of the economists is hinting that there is going to be a sharp correction, Mr. Tal was more optimistic, acknowledging the economy of today is not following traditional patterns. So that is where they are all also trying to figure it out, because things are not moving in the traditional format that it used to be, traditional patterns that used to be there. We are trying to normalize the abnormal. Let's face it, nobody has a clue what is happening. We are all pretending. These are some of the important aspects that are going on. So that is where we have to be become aware. I don't think so it is there, because there is a supply, and that is where I'll give you from a brief from real estate point of view is, you also keep on listening that the supply and demand is like, supply is very, very less and the demand is more. Now, when you see those particular things, the prices are not coming down. And from the 32-33% that went high in the 2016-2017 years, and that is where everyone, nobody has a clue what is happening. That is what they are emphasizing it. We are there. We are all trying to figure it out, but we are all pretending and we do not have a clue here. Both the US Federal Bank and the Bank of Canada will react differently. Okay, that is what is their inference. That US Federal Bank, and we are very much correlated with the US economy. And anything happens there, the spill is over here anyway. Central bank actions have worsened conditions in some previous recessions. By ignoring the signs, why their interest policy rates? Because recently we have had 1 or 2 interest rate hikes, and that is what they are trying to say. Central bank actions have worsened conditions. And that is why, and they're very much in tune, like they're saying that the interest rate policies are not completely done properly. Okay, let's head not into the stock market or somewhere else, but try to gather some information on our real estate aspect of things. This is what they are saying. Rising interest rates, yes, that is what we are seeing it on a daily basis, and government controls designed to protect homeowners from taking on too much personal debt are also impacting the housing market. Okay, few things have to be. Rising interest rates, yes, we are seeing those ones. The government controls are there to protect homeowners from taking on too much personal debt. Yes, the stress test you have seen. Now, if you have to go through your mortgage approvals, you have to go through that stress test, are impacting the housing market. Yes, that is what we are seeing there. Even I was reading an article that a builder is also like trying to tell the government that they need to change something. For the first time, and this is very important to read, the 5-year rate is higher than it was 5 years ago. Important. So things are very much, has to be that the 5-year rate is higher than what it used to be 5 years ago. So people are starting to pay more. So those people who had taken their mortgages, maybe variable long time ago, they are feeling the pinch. That will mean less disposable income for entertainment and other purchases. Absolutely, because if you're paying more on your mortgages, you'll have to cut it somewhere. Mr. Tal said, if the Bank of Canada continues to raise interest rate, perhaps as high as a neutral 3% plateau, it's taking a big risk. That is what they are saying. That in case if the Bank of Canada, because see, in case if everything, the Bank of Canada seizes it differently and it keeps on continuing to raise these interest rates, it is taking a big risk. Nothing is gradual about Bank of Canada rate hikes, and that is what they are coming. Basically, you are confused. In the end, that's what they are coming up with. We have no clue and we are confused. You have inflation. So one side we have inflation and we have growth. We are seeing tremendous growth. Growth is starting to slow down. That is what is their inferring. That is what their information is coming over to them. So when the growth is slowing down, if you are Bank of Canada, do you really want to start raising interest rates aggressively at this particular point? So in the end, what they are inferencing here is, if the interest rates are going to rise, there is going to be a big risk and there is going to be a problem. He said there has been nothing gradual about the bank hikes so far. And that is what they are very concerned about, because there were some 2 interest rate hikes, I think so, in the recent months. And that is what, it's nothing gradual, they are saying. In fact, we are already more or less where we were in many other cycles. This is not a gradual increase. Yes, it started from a low base, but it's not gradual. It's been rising very quickly. So that is what they are not liking. And that is where inflation and growth are not making sense to them. Those trends leading into past recessions have worsened the situation. So that is what is their conclusion there. And in the end, they are just telling you, buckle up. So that's their bottom line. And at this moment, let's heads over to our mortgage expert and let's see what he updates us on the format of this let him review this particular article. Yes, Faisal. Recession is looming. Hi. What do you have to pour your thoughts on this particular?
So 2009, when you were talking about 2009, briefly, it started late 2008 and 2009. So you know where properties were. Legro purchase, I saw. And 6 months later, almost, from the purchase to the rollback, it was about 8 months gap. And I remember it was over 20% hike in the time frame of January 2009 to October 2009.
Very true.
Okay. So to point that part of recession, it's usually temporary. It's very short period of time. It goes back up. That's number one. Number two, regarding the increase in interest rate, I agree with the newspaper news that yes, it is not gradual. It is quite aggressive, and there are many reasons. It is aggressive, but it is definitely not helping the market. One reason it is aggressive is our dollar, which is not doing well. And there's a whole lot of thought that I will keep off the show. But if you look at the economy and if you look at the dollar value, there's a reason why the government is trying to push the interest rate hike. However, that will affect negatively. I can see that as well. So yeah, all in all, what's being mentioned is definitely true. It's essentially a formula for, I cannot say disaster, but there is a risk of it.
I'll narrow them down to 3-4 points. See, in 2016, 2017, we had that 30 to 33% increase in the prices.
Yes.
Now, so that was one aspect. The government reined in. The stress test came in over, and then now they have done the increase in the interest rates. So that is where the government portion came in over. They managed to handle this particular situation. But the main thing that we as real estate agents, when we are going in the market and showing, the supply is not there. We are struggling now to find properties in a price range in the Toronto area. Toronto is almost becoming out of reach for many of the clients. And that spillover had been in the outer, in the suburbs. Yeah. Now, with these recent, so the supply and demand is there. Now, next one is this last week that we discussed, the Oshawa GM plant shutdown, which is looming there.
Yeah.
And that is where, I mean, I absolutely think from all of these aspects, from 4-5 things angle, we have no clue. But something is happening. And that is where, I mean, that article is. And those are the experts. So, I mean, they are saying there is something happening. And that is what I was wanting to point out. We as general public and should be, and when dealing in real estate, should be looking at those 3-4-5 factors, what is going on. We have no clue, but there is something that will happen. Yes. Down the line, there will be some adjustment. I would say it as an adjustment. There will be some adjustment, so some up and down, and so that it stabilizes, the entire thing stabilizes as such. Because I was going through an article today that a builder is now requesting the government that like whatever you had reined in with the interest rates and with the stress test, it is now. You need to take it off the table and bring some respite. Otherwise, there is something else going to happen here.
You know what builder is trying to say does have some valid points. Because every time, if you look at government policies to control the economy, like sort of, I can't say control, but to sort of guide the economy, those actions are usually after the problem has been occurred, not before or during. And once that solution is placed in the system, it takes some time for it to reflect.
Sure.
So that's what our problem was 2016, 2017, where prices went up, but changes were not done as fast, and they didn't take effect as fast. Now, at this moment, the changes that have been done are affecting us negatively.
Yeah, that's what we figured. Something is coming in. So just be aware, buckle up.
That's it. However, one thing I want to say to buyers specifically, that your home is an investment. It's a long investment. Can you always be lucky to buy at the cheapest price? It's not possible.
Yeah, just be a prudent buyer. Whenever you're buying, be a
whenever you can afford it, you can buy it, because it does not matter if your home went down $20,000 next month, because you're living in it anyway. You will pay rent somewhere else.
Yes, that's what I don't be an emotional buyer. Be a prudent buyer. Prudent buyer. Yes. Okay, let's head over to our next format. So, let me guide you there. We are reviewing this home buying step by step, Canada Mortgage and Housing Corporation guide for buying home step by step. And we had covered in the last few webinars, we have covered step number 1, is home ownership right for you? In the second one, in our previous webinar, we had covered with some sound glitches, are you financially ready to own a home? And in our last webinar, we had covered financing your home, where we had our expert walk us through lots of finer details there. And now when we were on this particular financing your home, this is where the CMHC guide took us, and that is where we went. It was very important part here, know your credit score. And they guided us that we should go to cmhc.ca/credit report, and that is where we headed. And so that's why we are deviating slightly for this particular webinar. And then once we complete the review of the credit report and the score, we will be back on step number 4, and that is where we are. Now let's get into the credit report and score, which is our main topic of coverage for this one. And let's head over to an important aspect here. Let me get you an update. Now, this is the Financial Consumer Agency of Canada, and they have done an excellent work, I would say, regarding understanding your credit report and score. Now, we'll be going fast on this particular one because we will dwell more into the next aspect of it, which is a workshop on understanding your credit report and score, and we will be able to learn quite a lot in there too. Now, we, as everyone is affected, we all have credit reports and score. We all are part and parcel of this, and we have very many queries regarding the report and score. And we always keep on looking for answers. Where can we find the right answers? Whom should we call? Where can I get this basic information? And this particular PDF, again, let me show you where exactly these links are. So give me a moment here and let me take you here, right here. In this webinar where you are at this particular moment, and this is being live streamed, if you go down and show more, you will be able to get a link on all these particular ones. Let me enlarge it for you. So in the YouTube live streaming, wherever you see show more, and then you should be able to go and see all of these ones. All of these links are there for you. The understanding and the workshop both are there, so you can get access to these reports right away. Okay, so let's get over to this particular one. It's a very important PDF, and it will make you understand the credit report and scores. Let's try to be fast, and we will get our expert as and when we require. Here is a brief about the Financial Consumer Agency of Canada, which is called FCAC. With educational materials and interactive tools, the Financial Consumer Agency of Canada provides objective information about financial products and services to help Canadians increase their financial knowledge and confidence in managing their personal financing. So this entire booklet, entire PDF is done by Financial Consumer Agency of Canada. This is their PDF, and we will be doing a workshop on it, which is like a 50 slides power presentation, and a very powerful power presentation. And we will be I'll be taking you to that particular one next. So let's go down and see. You have table of contents, and if you will be just glimpse through this one, you will be able to understand they are covering each and every aspect of it. What is your credit report? What is your credit score? Who creates these? Who can use these? What is in my credit report? How long does information stay there? How are my debts rated on credit report? How can I build my credit history? And I can go on, and this table of content is it is the whole 9 yards. It has each and everything. How can I use my credit reports to protect myself against fraud? How can I get the credit report for free? How can I order this report for score for a fee? How can I contact Equifax? How can I contact TransUnion? Okay, at this particular moment, let me take a brief from the mortgage expert on Equifax and TransUnion, so minor input from him, and then we go there. Okay, Faisal, quick question to you.
Sir.
At this moment, I mean, we see Equifax, we see TransUnion, I see Credit Karma, and I see Borrowell. Now, can you guide me? What exactly is like all these 3 or 4? I mean, where things are?
So primarily there are 2 credit reports. One is Equifax and another one is TransUnion. Now, Equifax is used widely by a lot of lenders, almost all lenders in the mortgage world. But if you go more towards, let's say, car financing, they use more TransUnion. They have their own benefits and their own drawback. However, now they both report very similar. Their scores are very close to each other, but the calculation of scores, they have their different formulas. Borrowell and Credit Karma are both based on TransUnion. They both get information from TransUnion, and what they get is something called as a credit vision score, which is a little bit different than the Beacon score. It's slightly higher usually. Sometimes it could be lower as well, depending on when the update was. But all of them, Borrowell and Credit Karma, they're third-party companies that do get the information from TransUnion.
Okay. When we are on this particular one, so but I was also reading, like, though you get all of these information from Equifax or TransUnion, but the banks use a different score that's called FICO, if I'm right.
FICO is in states.
Oh, okay. So that's nothing to do with us.
It's a Beacon score they use. Beacon score is the right term, and that is from Equifax.
Okay. So now, I mean, do the banks rely completely on Equifax and TransUnion, or they have their own set of?
No, they rely on Equifax mostly. Sometimes if Equifax has some negative information or things that sometimes don't make sense, they will also check TransUnion. At times when I check a credit bureau and if it does not make sense, I myself pull TransUnion as well to cross-check and reference as to what is on Equifax and is it the same thing on TransUnion or something else, because depending on name, depending on date of birth, city, and so on, you may have information that actually doesn't belong to you.
Okay, now when we are just on this topic, I was also reading, I mean, when I was going through this report, that you can get your score report for free, but the score, you have to pay a fee for it.
Sorry? Yes, there is a fee for it, yes.
So the report, you can get it for free, but not the score. I mean,
not the score. You're right, and the report comes in mail, or you can go to Equifax Center and get it from their printout. But if you want a score on that report, you have to pay for it.
Okay, let me get back. I appreciate your input there.
Thank you.
Okay, let's head back to where it is. So you are that is what I was saying. How can I order my credit report or score for a fee? And the credit report is free. The score is always you have to pay for it. And then they go through some examples of credit report and scores. And I'm really amazed that the way that they had put the entire report and how they explain it to you. Amazing stuff here. So kudos to whosoever has put this together. And it's really a very, very important one. Okay. Now, building a good credit history is important for your financial health, but obvious each one of us have to do that, and you can also use your credit report to check for signs of identity theft. Very, very important. You have to once in a year you should review your credit report, and if possible you can order your score too, and make sure you there's no identity theft there, and that should be very important here. Okay, so now let me take you to that particular, let me get you onto the PDF, and that will help us guide with more of the information here. Okay, so now I have highlighted points and we are going to go through it. So again, we are on understanding your credit report and scores, and now let me take you Financial Consumer Agency of Canada. I have gone through this one, and now let's head over here. Yes, millions of other Canadians, you have a credit history along with millions of others Canadians. So everyone has a credit history here. You have the right to see your own credit report, and there are ways you can get it for free. Now, I'll show you at this moment. Let me see how can I answer you this particular one. All four of these ones you can get them for free, and let me see if I can take you over to the four of them, and let's start with where you can get it for free. Okay, now let me head up here and let me zoom it for you. Yeah, so this is the page. Again, all these links are in the show below in the live streaming on YouTube, and where it says show more, you will see all of these links here. You can request to obtain my free credit report from Equifax. Again, TransUnion has it. Credit Bureau request form. Again, all these links are there. You can fill this out, and you may also request your credit report by phone. Those are the information for TransUnion. Again, Credit Karma, and when this comes, you can go to their website, visit their website, creditkarma.ca. Should be able to get it for free. Your credit score should be free, and now it is. Okay, so they are giving your credit score for free. So they're basically giving you an idea, and that is very good for them, because now you can also get your score for free. Again, Borrowell also does the same thing, and I am now taking you to Borrowell, free credit scores and reports. Get my free credit score. So you have two places where you get them for free, and at two places you can order them. And the Equifax and TransUnion are used by most of the lenders. So when you are a serious contender for mortgages, you can have Borrowell and Credit Karma to get an idea, and you can take it from there. Okay, so now let's head back to our stuff where we are, and let me go there. Okay, so yes, there are ways you can get it for free. Knowing what is in your report is very important. It could even affect your ability to rent housing. Some of the landlords are requesting these stuff, or get hired for a job. So it is in your interest to have a control over what is going on. This guide can help you understand your credit report and score. Improve your credit score. It will make you understand. It can help you improve it. It can correct errors in your credit reports. You should be absolutely. This is your. It is in your interest. It is in your absolutely realm of your work schedule that you should have an idea. Where is your credit? Order your credit report and score. So you should have an idea where things are, where you are going, and where you are heading, and your ability to purchase things and sort of things. Very important aspect, you should have a complete idea about your credit report and score. That's the bottom line. What is a credit report? A credit report is a summary of your credit history. If you have ever used a credit card, taken out a personal loan, or used a buy now, pay later offer, you have a credit history. Let's highlight some of the important aspects of. When you opened your account, your credit report contains factual information about your credit cards and loans. When you opened your account, how much you owe, whether you make your payments on time, whether you miss payments, whether you go over your credit limit. And now comes the next interesting part. Your mobile phone and internet accounts may be reported, even though they are not credit accounts. And at this moment, let me take our mortgage experts' review on this particular one regarding mobile phone and internet accounts, and ask him, walk us through this important information. Mobile
Yes,
phone and internet accounts. I mean, what's going on here?
What essentially mobile phone and internet accounts are the easiest ones to set up. So yes, that is it does like they're opened very easily. They could if you don't check your credit report, they could, like, you might see these accounts on your bureaus that don't even belong to you.
Okay, again here. So that means you're saying someone can easily misuse them?
Yes.
Really?
Yeah. There's least amount of security check for mobile phones and internet accounts.
So someone can, but the main thing is when you are trying to go and seek a mobile phone, they check all your information there.
So there are some companies that do that. There are some companies that don't. It's very inconsistent privacy check.
Oh, okay. So
it's not controlled. It's not governed. There is no body that really says you need to have these many things, front and back of ID, or so on and so forth.
So So basically, they can rack up your debts.
Yes.
Oh, okay. And
it's not. Sorry, it's not a whole lot of money usually.
Yes.
I've had multiple phone calls regarding it. That I don't know this Bell phone, and I'm not sure where it came from. And when they start doing investigation, if it does not belong to them, it does. Like we're able to remove it. However, it does take some time. So you're right. Preserving your information carefully is very important. Shredder is a good thing to use. If you have a mail that comes in with your name, at least the cover. You should the envelope that it comes in, if it has your name, address, information on it, make sure you shred it.
I appreciate that. Okay, this is like, I mean I was because numerous parties that we have dealt with, mobile phone has been like if there is not paid, even that is being reported, and that spoils the credit. Yes. So mobile phones are playing a very major role there. So that is.
And these are things that clients are not aware of. Let's just say, if client is aware that, hey, I didn't pay a credit card, then at least client is conscious and they make some effort, something.
Okay.
Versus if you just don't know. It's a problem, and it's a problem when you're going for a pre-approval.
Yes. Okay, let's head back. Okay, Checking and saving accounts that have been closed for cause due to money owing or fraud committed by the account holder can also be included. So everything like your banking and every aspect remains there. Okay. What is a credit score? In Canada, credit scores range from 300 to 900 points. The best score is 900 points. I'm slightly trying to go very fast. The basic, because we all have an idea, but at times when we are stuck, this PDF is extremely handy. You can go through it and you can read each and every aspect of it. Lenders and credit reporting agencies produce credit score under different brand name such as Beacon, Empirica, and FICO. That's where I had heard the term FICO, and that is what I was trying to get an answer for. So those are some of the aspects of that particular one. Why might the credit score I receive be different from from a lender is using? That's what we said. They are slightly different between Equifax and TransUnion. A credit score you order for yourself may not be the same as a score produced for a lender. That's where their reporting criteria are slightly different. They're all in the ballpark figure there, but they not be exactly the same. Okay, who creates my credit report and scores? Now this is interesting, so you should have an idea here. Credit reporting agencies are private companies that collect, store, and share information about how you use credit. An agency is called a credit bureau or just a bureau. So these are basically private companies. In Canada, there are two main credit reporting agencies, Equifax Canada and TransUnion Canada. Okay, so when a lender or other organization checks your credit or pulls your report, it is accessing your credit report at the credit reporting agency. Other sources of information include collection agencies, office that handle child support, and public records filed with courthouses. Let's get some information review from our expert regarding the child support information there. So let's head back to him and let us get him to review this particular part. Yes.
Yes, sir.
Child support.
Child support and spousal support.
Okay.
They both go through a body called, in short form, called as FRO. In a long form, it's called Family Responsibility Office.
Okay.
It's an office that works very close in conjunction with family court for individuals that owe support payment on a monthly basis, owe child support. And this body is very, I would say, powerful.
Okay.
I've seen them take away driver licenses if
Wow.
you don't pay your spousal support.
Okay.
Voting license, you name it. They're very powerful body, and they put if they put that on your credit bureau. So any child support or spousal support that shows on the credit bureau and is that you're supposed to be paying gets added to your liabilities. So ultimately, it reduces your borrowing power.
Yeah, that's what I say. I mean, so both of them are getting reported on the credit reporting agencies.
Yes.
And because we've had clients who had child support or anything outstanding, it's difficult to. So, and we also, like when we are on this topic, we also have, in case if there are any taxes, your taxes. If you haven't like filed to your taxes, does that also get reported?
You know what? Depending on, I've seen sometimes they are reported, sometimes they're not. Depending on how far the proceedings have gone. Most times, if your taxes are not paid and it's outstanding, you get letters from CRA. If you ignore them, you get a call. And after that, I've seen, even bank accounts frozen. I've even seen on credit bureaus, things along those lines. So I think it depends on how much you ignore them or don't follow up, or things along those lines.
So, income tax is also getting reported on credit reporting agencies?
Not income tax when it is paid on time. When you don't pay, for instance, let's just say someone sold a rental property. A client sold a rental property with a big capital gain. And if they don't file their taxes, there is step-by-step that CRA takes, and at one point they do put that on credit bureau, but it is not the first time that they put it on the credit bureau. It does take some time.
Okay, but we know, like, lenders will not do your mortgage or if you have income tax not filed. Is that right?
Absolutely.
So is that getting reported on the credit reporting agencies, or how do they come to know, like, okay, this person hasn't done his income tax?
They report on the credit bureau, right on the credit bureau.
So okay, so CRA, that means in case if your taxes have not been done, they are getting reported on the credit reports.
If they're not being done, if you owe them, it's not usually because if they're not being done, but if you owe them, then yes.
Okay, so basically, okay, you haven't done them, but you're not owing them, but you can't get a mortgage then.
Yeah, it's a very difficult, almost impossible.
But if you have not owing them, but you haven't done them, how do they come to know?
Then it's a gray area.
Okay, so in the end, something will come, because if you're not,
Exactly.
if you haven't filed, then down the line you will be owing, and it will get reported. Okay.
Yes. See, even if let's say someone thinks, it's not showing on my credit bureau, and I haven't filed taxes. Let me just take on a mortgage. Let me start. CRA has the first lien.
Yes,
on your
CRA
property.
has the first lien. Yes, okay. No, because see, the reason I'm pointing it out here is, like, if you haven't filed your taxes, we can't get a mortgage. Is that right?
If you haven't, not necessarily in every case.
Okay.
It's case by case.
Okay. Let's head back to our. Wow, these are small, very small things, but you have you have to have an idea there.
Yes.
Yes. Okay.
These are, the structure is the same, but these details make it or break it.
Sure. True. Okay. Let's head back to our PDF. Okay, now we are back to our PDF. Okay, so that is some of the synopsis which we are giving you regarding the child support and spousal support. Now let's head to the next. Okay, who can use my credit report and score? There are regulations in place to protect your personal information, including your credit report. I'll when I go back, just remember this, Faisal. I'll be asking you. Aren't we Equifax recently? Let me get back to you on this particular one. Faisal, Equifax recently had quite a large breach of data. So, they have all our personal information.
Yes.
And we are absolutely now vulnerable.
Sir, we are in a world of technology, which makes our life easy, but also makes us vulnerable.
At this moment, these are the two companies which are doing everything, and they have all our information, and they're receiving information from every aspect of our like life. I mean, you're buying, selling something, and it's getting reported. Everything is there. So and they are vulnerable themselves. How is how do they? Okay, let's leave it at
no
that.
solution to that.
Yes,
I would say solution to that is your credit cards usually offer an insurance called as identity theft insurance.
Yes, I mean, the exact aspect that I was trying to ask you here is, now these are private companies, and shouldn't government be having their own company here, or just leaving it to private companies and they are working on it? I mean, it did, or what exactly is there?
Well, yes, these are private companies, but they're also not. They're quite large. They're quite
large,
quite secured, and so on. It's just things happen of this nature when the data is that much more valuable. So I think you know how they say buyers beware. I strongly recommend clients to get some sort of a identity theft insurance. It's not expensive. It's a very inexpensive product, very easily available through your credit card, or many different forms that you come to.
You said identity
theft insurance.
Identity theft insurance. Okay, so like public should look into that.
Public should look into
that, just to make sure because these are private companies. You have to protect yourself at a certain stage.
Exactly.
Okay, let's head back. Okay. Usually your credit report can only be used to lend money or extend credit to you, collect on a debt you owe, consider you for a rental housing or for a job. Now, this is, I would like to know, why are they wanting to know about the job? Let's head back again to our expert there. Let's ask him. What is going on with, they are using your credit report and scores for a job these days?
Yes.
Yes, because I've heard.
Not just jobs, sir.
Rental.
Even for rentals.
Yes. Rental, I understand. Okay. So, rental is part and parcel of the real estate housing.
Let me just tell you a few scenarios here.
Okay.
Let's just say a financial advisor has been bankrupt for 3 times.
Financial advisor. Okay.
Okay. Do you think that would make? Do you think that person is suitable for that job?
Okay, understandable, because if he cannot manage himself, how will he manage your finances?
Now the body allows, under exceptions, they allow 1.
Oh, okay.
Okay, under exceptions.
So that is where it is coming handy.
Exactly.
Okay.
Now that's one scenario.
Making sense. Okay.
That's one scenario.
Okay.
Another one that I have seen is, let's just say, specifically, I've seen is under security clearance.
Okay.
Like something high paying, I would say high, for instance, all in financial institutions, regardless of what position you do, your criminal background check is done and your credit is checked. And if it has some blemishes, you're asked to sort of explain.
Okay.
And sort of go from there. So yes, that is one of the reasons.
So basically, they're trying to understand you as a complete person. Okay, makes sense. Okay, let's head back. From the way we are going, and we are still on page 8 of 44, and the rest of them are not there. I had cut it short, but I mean, Let's see how much we can cover. Maybe we'll take a few minutes extra because it's almost 8 o'clock, and we'll try to have a few minutes extra and see if we can at least cover half of it. Provide you with insurance. Okay. Credit report and score provide you with insurance. What does that comprehend? Meet a direct business need. Okay. Let me ask him about what does that mean? Provide you with an insurance. What does that comprehend? What does that comprise? Provide you with insurance.
Provide you with insurance. Essentially, like some sort of assurance, some sort of safety.
Oh, okay. Yeah, makes sense. Okay, like you have a stability. You are a person who has managed to maintain his finances. So this is the financial aspect of you is okay.
Yes.
So some kind of an insurance on that one. Okay.
Mm-hmm.
Lenders, employers, or landlords can only use your credit report when you give consent. Very important. So I mean, no one can be using this without your consent letter there. So just be very cognizant of this particular aspect of it. Usually, when you sign an application for credit, you allow the lender to access your credit report. We all have to sign that. So some of these aspects you just have to make sure, like sometimes when you ask yourself, like you're not accessing my credit report, just be cognizant. He is not, I mean, by law, he cannot, without your written permission, he cannot access this. Let me again seek his info on this particular one for a moment. Yes. So that is absolutely, like, without a consent, you cannot access someone's report.
Absolutely not.
So even on a job letter or something, they will have to sign you with something of the sort.
Absolutely.
These are essentials, huh? Basic essentials.
Yes. These are basic essentials. Also, you have to understand, the more competitive, let's just say whatever you're applying for, a rental, a mortgage. A mortgage is standard. You have to do a credit check. But a rental, a job, whatever else you're applying for, if you, it's a supply and demand. If there is high demand for that product, you are one of the competitor and for that product, and therefore there will be also all sorts of requirements placed to filter out and have the best of the best. For instance, let's just say there's a downtown condo close to CN Tower, penthouse, priced right. There will be lots of applicants.
Yes, and lots of people trying to purchase the property.
If I am the landlord of that property, I'm looking for the best of the best candidates.
Yes, you're trying to see if they have a good credit history and things
yes.
like that. Wonderful.
And these things, I mean, let's just say if I'm renting a condo in North Bay.
Yes.
Much different. I may not even need credit report because I may not have enough applicants.
Okay, makes sense. So in the end, the basic thing here is, like, see, no one is able to access your without your consent, and if someone is doing it, you can report it.
Absolutely, yes. You can challenge. So any credit searches that are done on your credit report
without your consent, yes,
without your consent, can be challenged. Yes,
can be challenged. That is the gist of this particular one. Okay, wonderful, makes sense. So we are making you aware, like landlords, lenders, employer, landlords can only use your credit report when you give your consent. So it's very important that you are giving consent to it. Some provincial laws permit government representatives, including judges and police, to see parts of your credit report without your consent. So only, like, some provincial laws may permit that. So you just have to be clear. Judges and police are like, so you may have to get more info on that one, in which province you are and how it is taking place. Okay, next is, I think so we have touched only 8 or 10 pages of this particular one. So and it's almost like 8 o'clock at this moment, and let's head into this particular section for next time. And in the meantime, let me get you two of the websites of the mortgage expert. Give me a moment here, and let me take you there as soon as I'm able to get you on this one. Okay, so ladies and gentlemen, your mortgage expert is Faisal Garcia, and this is one of his websites. Let me see if I can zoom it further. And so his website is faisalgarcia.com, and he is our mortgage expert par excellence, and he is also an absolute expert in the credit repair, and that is his let me again see if I can increase this one. It is his another website, which is called creditrepairnow.ca. So two of his websites, and you can go there and seek direct contact with him. And in case if you're planning to get a mortgage or you're planning to get a credit repair done. And let me walk you through three of my pages so you can comprehend where we are and where we are going. So the understanding of the credit report and score is probably taking us a wee bit of more time than we anticipated. And let's see if I can get you. Yeah, so our credit report and score is will be continued for the next week. And now let me take you over to two or three of the websites that are there. And so this is like one of my pages which I email you constantly to subscribe, which is called MA in Real Estate, that is Master of All Real Estate in the Greater Toronto Area, whereby I walk you through, I curate 8 or 10 articles on a daily basis for you and put them together for you. And I email it to you daily. And that was what we were discussing today. Economist at Toronto Real Estate Forum, recession on the way. So that was the headline for today. And that is what we were working on today. Let me again give you next two pages, and so that you can understand those two pages. Give me a moment. Let me highlight them. And those are two of my web pages that will give you a brief about where things are and where we are going. And as soon as those two pages come in over, and we will be these are these looks very easy, that the credit score, but I have seen many people asking us simple basic questions and they do not have access to getting this correct information. That is where this PDF is extremely handy and walks you through. Okay, so let's and that is why we are spending a lot of good time in here to understand and guide you some of the things that we come across on a daily basis. And let me now take you to the two pages that I'm walking you through. If you are new, and you can always register here, where I will be guiding you with a live webinar we have on every Monday between 7 and 8 p.m. And that is manojatri.com/webinar. And when you scroll down on these particular pages, we are doing it on every Monday, working Monday, and that is where we are. Now, this is all the previous webinar videos. If you click on this particular link, you can see all my previous webinar videos. The ones that are completed will be at the right away here, and the ones which are coming next will be here, like we are doing the credit score and report for today. So that was the coming soon, and these are constantly updated. Now, regarding the previous webinar videos, once you click on this webinar video, it will take you to another page, and let me get that page across to you. And as soon as that page comes, I will take you back. Yes, now this is the page when you click on that particular webinar videos, and you can see all our previous videos here: introduction, down payment, rent versus buy, it pays to own, legalities of renting, marijuana in condos, and a very excellent one on power of sale and foreclosures here. Home buying step by step, that is where we are. Home buying step number 2, home buying step number 3, and from that is where we have deviated regarding your credit score and report, and that is where we are for today. So again, ladies and gentlemen, thank you very much for joining us for today evening. Let me get you our expert there to conclude the session for today.
Yes, sir.
Your thoughts on today's. We didn't cover too much, but we were slow, and but to the point. Go ahead.
Slow and steady wins the race.
Absolutely, appreciate that. Appreciate that.
I think the topic we're also covering is extremely important. And a lot of times I have seen clients that have 20% down payment, 25% down payment. But a lender looking at a credit report comes back, and the comments that they make, sometimes I cannot even share those comments, is the client is irresponsible. The client does not understand what credit is. Client cannot get a mortgage at 50% down.
Wow. Yes, go ahead.
It depends on, because see, and if you look at it from the lender's perspective, because there are sometimes comments that they make and I don't agree with them, and I have to call, and I set up a conference call and sort of try and understand as to what they mean. And their answer is, Faisal, we give a loan on a home. However, our goal is not to take the home away from the client. Our goal is to continue getting the payments in time so we can pay our investors, because banks have investors. And so they're looking for this revenue stream that will come month after month. And if someone has not shown a history that they can make those payments of those small bills, like a credit card, a phone, and so on, how can you expect that client to pay a full mortgage payment?
Really, very well said. Yes, that is where I was. See, everyone had a credit history, and everyone should be reviewing this, because see, earlier we were like scrambling ourselves how to get this information across to the general public. I mean, like anyone is asking, here is a PDF, here is a workshop, a PowerPoint presentation, just go through it. You will come to know a lot of things. I was really amazed at this PDF that the government has put together that explains you each and everything about your report, how to interpret it. Very, very handy guide there. And that is why, I mean, these are all steps to home buying. I mean, you have to do your homework. That is when you said, like some of them even giving 25% and the lender is coming back. No, these are irresponsible.
I've even gone back to the lender and said, how about, because sometimes clients have parents that are willing to help.
Yes.
And I've even tried to structure a file where I would refinance parents' home, take some equity out, and do a 50% down. Imagine,
wow.
500,000 property, you have 250 down, and the lender said, Faisal, the client is irresponsible.
Oh, wow. Okay. At this moment, I think so. Just reviewing your credit report and score will save you money in interest rate, will save you money in how much you can get. It is very, very, even if everything is okay, just double check it. Just make sure you know where you stand, where you are going. This is your report.
Once a year.
Once a year. Get it for free.
Just the way you go to your family doctor for a health checkup, your tax accountant, your financial planner. It's a good idea to check your credit once a year.
Wonderful. Let's call it a day at this particular one. We'll be again reviewing it for next week. Absolutely greatly appreciate your time and input here, Faisal. And let's call it a day.
Thank you for having me on the show, sir. And thank you again, audience, for listening to us and taking all that we have to offer for your home ownership.
Appreciate that. Without any sound glitches and some things for today. Let's call it before anything goes wrong. Okay. Good evening, sir. Thank you again for everything. Thank you to the audience. Thank you for joining. We'll see you next week, Monday. Thank you, guys, everyone.